Hello and welcome back. This is Vanessa Graulich, and today we're going to talk about property taxes. Let's do the math behind property taxes. Let's talk about homestead, especially here in the state of Florida. We're going to go through some websites that I have found helpful of how to, or basically how to understand what is homestead exception, how do they calculate the taxes, how do we know, what we're paying. So we're going to talk about that. First, let's understand what is the difference between assessed value and market value. Assessed value is a value that property, like the local communities are based, you have like a property appraiser, and he basically will have the evaluation of, he or she, the evaluation of how much they basically, like the local authority think that they can get tax revenue from your home. So the property appraiser, what they do is that they analyze, and we're going to see the math that they do, their budget, what to do, and then from there they figure out, okay, so this is going to be the mileage rate, and we're going to talk about the mileage rate, and that's how you find out how much your property taxes are. Now, let's go ahead and go to this website. I went to, and let me just go ahead and share the screen, and I want to show you this really good website, and I'm here, right here. Let me just move this out of here. Okay, so I found, this is Orange County Property Appraiser website. I felt that they had a really easy way of basically explaining what is a mileage rate, and they give you here a chart. So let me just show you here. So as you can see here, this is basically like a sample case, but they tell you, look, this is a brief step-by-step look at how to read the mileage rates and charts and estimate the ad valorem taxes using a sample case. Now, obviously, they say here, this is provided only for explanatory purposes, and it does not reflect current rate. Know that you see this and you're like, oh my God, I'm paying way too much of what the example says. So this is just an example, but look at this. So John Doe lives in Winter Park, and his mileage code is 04. Notice here that when you have the taxing authority, you're going to have 2, 4, 5, 6, 7, 8, 9, 9. Because in this case is Winter Park, they use mileage 04, and the assessed property value, remember the assessed property value is the value that the property appraiser gave, not the market value. Market value, which I forgot to mention that, is basically what others will be willing to pay in an open market. Just basically, you sell your house, your market value, hopefully, will be much higher than your assessed value. Sometimes, there are always cases that it might not be. Sometimes it's the same. It all depends how, the market moves. Now, we see here that John, right? He lives in Winter Park, and he has an assessed property value of $100,000. Now, his homestead exception is going to be $25,000. Let's see how this works. Look what they say here. Well, what they do here is that the taxing authority is a list of all taxing authorities in Orange County. By the way, if you have to do Volusia, you will have to do Volusia County and so on. And basically, this is how you do the county general, the school, look how much, the school, the state and local, they take a lot of the taxes, libraries, St. John's River, and then you can see all of this list, right? Now, the mileage rate is basically going to be this number right here that you see right here. Do you see that? And then what they do, and we're going to do an example right here, is that they add this plus this plus this. Notice that this is 5.1639 plus 7.8780 plus 0.4620. And then when you go all the way to the bottom, this is a subtotal of all mileages, not including municipality or county fire and sheriff mileage rate. So now we have here 13.5039. Again, this is from what's gonna go. I think like if you want to look at the mileage rate as a percentage, the way how you wanna see this is that you do, for example, 5.1639 and then divide that by 1,000. And it's gonna be much easier to understand. You're basically paying a little piece, right? And that's the reason why it's not, you don't do 5.639 times the, the value. You actually need to divide that number by 1,000, because look what it says here is per 1,000 of taxable value. But let's continue with the example. So look, we get all of this, we add it up, we have 13.539, that's the municipal, the county fire and the sheriff mileage rate. And then from there, look, they say city code, a list of all municipalities, I can say it, in the county in which your property might be located. If your property is in an unincorporated area, you pay additional mileage for sheriff's and fire services. Well, it makes sense. You know, all of this is like if you call 911, who's going to serve you? If you want to call the police, this is basically what your taxes, you know, are supposed to be paying for. And then look at here. Winter Park, the show here is 17.6379. Now, then they say here, city mileage rate. This is the mileage rate for the municipality in which your property lies. So you can see here that Winter Park, right? It has here what we said, the 17.6379. How did they get that? Well, look, 13.5038 plus, and then right here, 4.1340 is going to give me the 17. So the mileage rate is the addition of this number, which is going to be what? The taxing authority, right? Plus the city and mill totals, depending if you are unincorporated, like it says here, but in this case, the example is Winter Park. Now, from there, remember, the assessed value of this guy was 100,000, and then the homestead exception was 25. So how much taxes is he gonna pay? Well, they go like this. They say, okay, assessed value is 100,000. He has a homestead section of 25. Now the taxable value is $75,000. We all know that Winter Park, this will be like a miracle if that happens, but it's just an example. So then from there, what they do is that you can do this two ways. You can either do 75. What they do is that they divide 75,000 by 1,000, and that's how they get 75, which is the same that I told you before. If you do 17.6379 divided by 1,000, you're just gonna get a percentage. And it will be the same if you multiply those two. So then if you do 75 times 17.63, remember we got that from this number, the addition of both taxes. That's how they get the taxes. Now, from here, you can see here that it says formula to calculate taxes per taxing authority. This will be the taxable value, it's the same thing, right? But what they do here is that if you, let's say that you just want to do only a little bit of a piece, like they're doing here, you just grab, like they say, 75,000 divided by 1,000 times the rate. Now, when you see your property tax and you see all of those little numbers, you can have an idea what they mean. So these numbers here, and this is important because they send you like a budget and how much your taxes could be. Sometimes people just see that and they don't understand what it is. But from here, you can actually see how much you're paying for your county in general, how much are you paying for your state and local schools, and so on and so on. So for example, here they are paying in San Jose River. Again, this is just an example. But now I hope with this example, you know, it's a little bit easier to understand how basically the math of property taxes. Now, from there, now let's talk about the homestead exception. And I found this really good website, and I believe it's from Pinellas County. And I'm going to be putting all these links as well to in the references. And it basically explains you how the homestead exception works. So let's go ahead and do the definition. The homestead exemption is a constitutional benefit of a $50,000 exemption from the property's assessed value. It is granted to those applicants with legal or beneficial title in equity to real property as recorded in official records, blah, 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 when they make their permanent home, like when you're a resident and you make Florida your permanent home on January 1st of the taxable year, to put it that way. Now, let's say that your house is, if your house is 75,000 or more, just like they say here, then you will get your $50,000 exception. And then I'm going to be making another video only on homestead exception. Today, I just wanted just to cover it a little bit just because, you know, it was part of the property taxes. Or I'm going to be doing one where we're going to be going over the homestead exception in, you know, different examples and doing some math about it. That way we can, you know, clearly understand it depending of the house price, to put it away. I'm sorry, of the house assessed value, to put it away. Now, if the value, let's say that you have a house that is not $75,000, but it's actually $65,000. So remember, The $50,000, you're gonna get it only if the home is assessed value is $75,000 or more, just like, you know, it says here. But if you have a house that is $65,000, what is going to happen is that they're going to basically say, okay, 65, and just like it shows here, like if you do 65, right, minus 25, you're gonna get 40. And then from there, you know, the additional, so it says here, so, you know, they're not gonna basically going to do 65 minus, you know, 50,000. They're just basically gonna say, look, you get your first 25 and move on, to put it away. Now, tax exemptions, like I said, I'm going to be making a video only on this. If you have to go to, like, let's say like you're in Volusia County, or you are in, let me see another county, I don't know, Miami-Dade, Broward County, you can actually Google Broward County property appraisers, Miami-Dade property appraisers, and I will highly recommend you to go to your property, you know, appraiser, depending. We will be doing one, like I said, only on Homestead Assumption. This is Vanessa Graulich. Have a good day.